Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, February 9th, 5:20 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the streamline edition of the Revere Daily Market Insight video. These videos have just been getting way too long. We're going to cut back and try to just hit the important stuff and wrap them up much quicker than they have been. I'll talk forever, given the opportunity, but I don't think anybody needs that. I think you just need the important stuff. And that's what we're going to crystallize these videos down to. So, state of the market, we're in an uptrend, but certainly not a good day today. Check over here at the trend gauge, still showing bullish for leaders, but the yellow sub arrow as we've kind of stalled. Uh, really, there's a saying that strength is revealed in the pullback, and we are seeing some of that. Some stocks breaking the 21 and some holding up very well. So those are the ones we really want to focus on. So from that standpoint, a lot of this pullback is going to be a help, providing the bulls show up shortly to support it. A key level was broken today. Short-term 21-day moving average showing the yellow sub arrow because the Dow closed below the 21 today. 50-day moving average still green with the sub arrow. The Dow closed right on the 50-day, but the slope of the 50-day is rolling over. And long term, still showing neutral. We've got still a negative trend on the slope of the line in the Nasdaq and the S&P, and basically flat on small caps, mid caps, and the Dow. So all five are above their 200-day moving average, but I think the market is telling us it's time for a pause. So what just happened today? Pre-market, we were looking pretty good. And then some employment data came out and kicked the futures up even higher as it was weak employment data. We gapped up, we opened strong, but we put in the high of the day within the first minute. That's never a good sign. And then we just bled lower. So the big gap up failed into a trend down day all day long. Persistent selling, distribution day, bounced late and then sold off a little bit again. So there was a bit of a relief rally toward the close, but broke a key level. We did some housekeeping. I guess you could say we took out the trash. I'll talk about that when I show the tail of the tape. So G6 down 1.15%, S&P 500 down 0.9%, Nasdaq 100 down 0.9. Dow down 0.7, mid caps down 1.2, small caps down 1.4, global 60/40. Emerging markets and uh, foreign developed nation stocks outperformed our domestic indexes today, and bonds dropped also, so rates went up. Down 0.39% there. In-house GROTECTION down 0.7%. We'll quickly show the tail of the tape in some charts. But let's get right into it. First of all, what do we do at Revere? We are active managers. We believe in participating in the uptrend and protecting capital during downtrends. This chart here, this is job number one for us, downside protection. The gains will take care of themselves when a healthy market returns. But if you're approaching retirement, our process will keep you from any of these bear markets, and they all occur under this black line, the 200-day moving average. We're currently trending above all three indicators, all three timeframes that we track, but some weakness lately since the FOMC. We broke below a key level, and a little bit of a pullback. And as I said, some leaders floundering also. Others holding up just fine though. So a little bit of a mixed bag. But here's your S&P 500. Let's go to a 5-minute chart here so you can quickly see. There's the gap up, and then just lower highs and lower lows all day long until a 330 bounce up into 490. Where did we bounce to? Well, the lows of 3 days ago. But this is not a good look. Go to the 60-minute chart. 4100. We've been talking about how that's key support. We got 4094 there. We broke below that. We broke below the pivot of when Powell spoke yesterday. We broke below two key fib levels, and just not what we're looking for. Today's low is pretty critical. The next level down, 40.50, which is where the 21-day moving average is, as well as the pivot for FOMC, pre-FOMC. So that level's absolutely got to hold, or we're going to test 4,000 and the support level down there. So certainly not what the bulls were looking for today. Here's the NASDAQ 100. Uh, Arguably, if you're looking for, oh, let me go back to the S&P first of all. Also, we got negative stochastic crosses to the downside from overbought on all five of the major indexes and all six of the G6 ETFs that we track. Arguably, it's very clear on the S&P and the Nasdaq. Um, this could just be a bull flag uh, after this move up, and it's just time for a little bit of a pause. Um, but we could surf the lower part of this bull flag until we reach down here at support, which is another few percent lower. And at this point, really what we need to focus on is what are the individual stocks doing, and is the market and the major indexes, most notably the NASDAQ 100 and the S&P 500, are they going to hold their 21-day moving average? We're still 2.6% above on the NASDAQ 100, as it's been the strongest of them. On the S&P 500, we're less than a percent above the 21 now, 0.8%. We've also broke below the 8, which we hadn't for a while, and the slope of the 8 has rolled over. So not a ton of good news, but not broken charts yet by any stretch of the imagination. We're holding horizontal support here on the Dow near today's lows. Clearly need a bounce there, sitting right on the 50, but the 50-day is slightly rolling over, and we broke below the 21. Mid caps have been weak since the employment report came out, and higher rates are not good for growth stocks. They're not good for small caps. Still above the 21 here, but you can see the slope of the line since the employment report on Friday. Uh, Really threw a wrench into the positive reaction that we had post FOMC. Small cap sitting right on the 21. Let's go to the VIX because we had a first close above the 21-day moving average in going back to the beginning of January. That coincides with the rally. So this is a change in character too. Closed at 2073, basically right on the declining 50-day moving average, and coming up off of overbought. So the the market doesn't go straight up or straight down, and we're at a minimum taking a breather right now. All of the stochastics are pointing toward this continuing. So what we do, we took out the trash today, as I mentioned. We cut back exposure and make sure our stops are in place, and we'll probably pull back big time on any buying until we at least get uh, back above the 8 EMA and make sure that we hold the 21 EMA on the downside. The dollar, while it was down today, let's look at a 5-minute chart. It didn't help. Big gap down, and the dollar just trended higher the same way stocks were trending lower. So that negative correlation very clearly back on an intraday basis for the dollar and the S&P 500. Let's go to TLT, and we'll look at a 5-minute here, and we're going to see the complete opposite. So we started up on bond prices, which means yields were down, but by the end of the day, a complete reversal. And this 1 o'clock level was key for bonds. Apparently, the bond auction didn't go very well, meaning there wasn't the demand that they like to see for the way bonds are priced. And that just notice it was the complete opposite on the bond auction yesterday. And I mentioned this in last night's videos, where they initially popped up because demand was strong, but then faded and then gave it back up. Today, a big move down and continuing down to the lows of the day. And this means that, let's go to TYX, this means that rates are going higher. Um, Above, so an outside positive reversal on bonds is not what anybody wants to see. It means rates are going higher, bad for stocks. So we briefly undercut false breakdown versus the 21 and the 50-day, and then made a higher high, as rates really have been moving higher since that employment report last week. That's the 30-year. Let's go to the 10-year. Same situation, bounce off the 50-day, clear change in character on rates since last Friday. Junk bonds down today in line with stocks. This down means junk bond prices or yields higher also. Corporate bonds, LQD, these are investment grade. Also, price down means yield higher, so that's consistent across the board. Let's look at BND, the broad bond index. Same thing. Uh, Breaking back below the declining 200-day, below the 21, below the 50. Even though stocks were down, gold couldn't get a bid. Well, it got a bid for about 5 minutes. Here's basically the same as the indexes did, gapped up and then just bled lower. Gap up in sync with the indexes, but then complete reversal of what the dollar was doing. Dollar got stronger, gold sold off. We finally exited GDX today when it broke below that 30 level. Actually, we sold it around 30.10 as it. You can see this just ended up being a bear flag into the declining ADMA and then fail, breaking the 50-day moving average. Exited that trade. You can see the relative weakness over the last 2 weeks in gold stocks. Finally, SLV breaking recent lows. And that's really come apart. And Bitcoin, BITO, is just saying risk off, down 3.8%. Sure does say risk off. So those are the major indexes. Let's quickly show the tail of the tape and then a couple of charts. You can pause this if you want to. I'm not going to go into as much detail as usual in an attempt to streamline these videos. I will note that AAII sentiment bulls were up from 29% to 37%. This is the historical average for bulls at 37%. VIX above the 21. And what we sell today? We sold the laggards. We'll go through those charts. Reduced our exposure from 1.1 to 0.82, and we bought SARK, an inverse ETF. When it looked like we might be bouncing, we added to SPXL, and then that took our exposure a little bit up. And then as we started breaking lows, our stops getting hit, and we got out of all the weakness. So let's look at some of these individual names. I already showed GDX. We sold that. Shopify. Uh, all in all, not bad today, but another one that gapped up, showed some strength, and then immediately failed. And once it got below this 50 level, our profits were disappearing, and we locked in the last bit of gain on this. Can always re-enter it if strength comes back into it, but it's shown no strength over the last 5 sessions. All strength has been sold despite the fact that the volume has been weak on it. Bros, same thing, just really can't get going. Uh, Broke the recent lows. We sold that for a small loss. All the losses within our tolerance of 0.1% versus the overall portfolio. OIH gave up yesterday's gains. That had been trailing the S&P since we bought it. So yesterday got us back to even. We took a small loss on that today. And DT not recovering from the secondary offering when the market is starting to show iffy action. Anything that you're negative on, don't let it go extremely negative. Small losses are very easy to replace. Big losses never are. So basically, like I said, taking out the trash. Let's see what else. And SARK. So ARK, okay, this is the inverse of Kathy Wood. She's been having a good year. But broke below the ADMA. That's a change in character. It's sitting on the 200-day, but with this break in the ADMA and SARK above the ADMA, we took this inverse position. That's a hedge against some of the longs that we have left. So the bottom line today, gap up, all day selling, close under 4101 support, and a break of the 8 EMA. Next level down that we have to watch is at 4050, 4051. That really needs to hold to get back in the good side of the market. We need to get back above this 4100 level so that this looks like it's just a one-day sell-off. and we'll see what tomorrow brings. Very clearly, the 21-day exponential moving average needs to hold. So that's going to wrap it. As always, love to hear from you. The email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. You can also reach out to my partner, Dan Stewart, dan@revereasset.com. And as always, remember, it's not how much you make in the market, it's how much of that you can keep. And with that, this is Don Vandenbord closing out the Revere Market Insight video for February 9th, 2023. Remember what we do at Revere, we tell it like it is. It might not be what you want to hear, but just the facts, telling it like it is here at Revere. Podcast tomorrow will be released Friday afternoon, emailed out Saturday morning, and we'll have the 21/21 update tomorrow in the video. Thanks for listening and have a great day.